Hey there. So I wanted to make this video before I go to sleep because I feel like there is a good opportunity in leisure company stocks. If you didn't know, stocks always move in sectors and industries. So when an industry is moving, all the stocks in an industry are likely to move. If semiconductors are moving, all the semiconductor stocks are going to go up. Now, sometimes money always flows out of other sectors, like currently technology is dropping. And that money, of course, has to go somewhere. And it is currently moving into other sectors. And one of those sectors is leisure stocks. We have 4 stocks over here. I'll explain. All of them have the daily chart. So each bar here represents one day. And I do have this data table here. So it has the word IBDRS. And that value just represents how the stock price has been performing in the last year. The higher the value, that means the stock has been really strong. And 1.5 ATR means the 1.5 times average true range of the stock for the last 14 days. So this is the value and this is it percentage-wise. Now, to prove to you that stocks always move in sectors, let's go back to 2023 when leisure stocks were also moving. And I'm going to show you that it's a very profitable move. RCL went up 90%. Carnival Corporation, I already measured it, went up 94%. Norwegian Cruises went up 90%. Carnival Place probably also did up 90% because they all move in groups. 120%. So we can see that they all moved at the same time last year. On this day, if you look at the cursor through all the time ranges, you're going to see that they all move up together. All the leisure stocks are moving up together. And when they start crashing, they all crash together. And when they start rising again, they all rise together. Because big banks and big hedge funds, they cannot put all of their money into one stock. So when they know that an industry is doing well, they have to spread out their money into several stocks. So they have rules. That's one of the things that causes these things to happen. So when an industry is going up, of course, we want to be in the best stock in the industry because some stocks did 120%. Others did 90%. So how do you know the best stock in the sector? Normally, the best way to know is by looking at either the earnings or by looking at how the price has been. Which one is having the strongest price action? And you can look at this IBDRS number. And the higher the number, that means it's more likely to have a higher value. And currently today, we can see that RCL is breaking out and actually has already broken out. And it's a good time to enter this stock if you don't have it in your portfolio. Get out of some of those tech stocks that are crashing and enter this stock. And by the way, this is not financial advice. This is something that I would do if I wanted to increase my portfolio. I would also like to disclose that I have a position in this stock. And that's because here, after the correction, I thought it was breaking out already. As you can see, it went above the highs. And it didn't, so I bought some at 120 already, and I already have a position that's up. But it's in a spot where I would buy again if I hadn't bought it before. And let me show you why. When a company starts coiling like this, consolidates, goes down for a while, does this one with 13% correction. Then it goes up, and then it does 11% correction. Then it goes up again and does just a 5% correction. What does this tell you? It means that people are willing to buy it at higher prices. But when it corrects, it's not going down as much. That means that they're not willing to sell it. And that's one of the first indications that this was one of the top stocks in this sector. And if you had to choose and you only had $1 and you had to put it, if maybe there was some evil king out there who was like, you got to choose the best stock or I will kill your whole family. This one might just save me and my family. So as we can see, it broke out. There was high volume. We can see here the volume. So when the volume is white, that means it's a pocket pivot day. And that means that the volume has been higher than the previous selling days. And we can see the percentages. It is above the average volume and it just broke out. So the way you can buy this stock is get 5% of your account. Just put a little here. So get 5% of your account. The stop loss is going to be, I normally just do 1.5 times the average true range of the last 14 days. That's why I have this table that I made that it just makes it very easy because you don't want to do these calculations. You don't have time. So just make it easy for yourself. So I just see here $5.75 or 3.71%. So if you have a $10,000 account, just get $500. And what's the worst that could happen? So since the stop is around 4%, what is 4% of $500? I don't even know what that is. It's about $20. So the worst you could lose is $20 of your $10,000. And what I do is that once it moves maybe half of this ATR, so maybe around 2% more, I put my lot around here, 2% above this price. What's 2% from here? There's this tool here that will tell me 2%. Around $158, $157, I would put in another 5%. Because now if it has moved 2% in my favor, then I know that, hey, the price is going in the right direction. So now I will be having 10% of my account into this stock. And what's the stop? If you have $1,000, the stop is going to be around 3.7%. So the worst you could lose is 37%. And what's the best you could gain? I think this thing could go around 30 to 40%. Last time we saw that it did, what did it do here? Let's check. Here, the move was about 65%. Now, of course, we're not going to get the whole 65%. The good trader might have bought it here and maybe you could only make around, because you also can't sell it at a real high. Maybe you only make around 35% of it. So we can see that maybe the stock could be making around 40%. So from the $1,000, you could be making $400. And the worst you could lose is $37. So are you willing to lose $37 to make $400? I am willing to take that bet every time. But the good news is that this is not the only stock that is setting up. The other stock that is setting up, if we go back and compare all of the stocks, so we can see here that since all of the stocks were correcting, some corrected more than others. So people were more willing to sell these 3 other stocks than to sell RCL. So that means that this stock is the best option. But if you wanted to have 2 stocks in a sector, the other one I would choose, of course, we just look at the IBDRS value and the way it's setting up, is Carnival Place. Actually, these 2 stocks are actually just the same. I think it's just a corporation split into 2 different stocks. So we have, that is the next stock that is likely to be good. And actually, I took a position into this stock today. Why did I take a position? Because I saw that RCL had already broken out the day before. That means that the industry is likely to be moving. So I bought here at 14.64 today early in the morning. And I also bought around $15 because it had gone about 2.5%, 3% in my favor. So I have 10% of my account in this stock right now. So let's say you did the same thing and your average price is here. The stop loss is going to be around 4.89%. As I told you again, this thing, as we've seen in the past, it did around, let's see how much it did last time. Okay, let's say you bought it here. This is the normal buy. It did around 80%. So let's say you're expecting around 60% from this thing. Of course, we don't know if it's really going to do 60. In Elliott wave principles, this looks like the stock has also been coiling. It's also coiling in its own way. Not as nice as RCL, but it is also coiling. So let's say it's going to go up around 60%. So that means you could make $600, yet you're only risking about $46 of your money. Am I willing to take that bet every time? Yes, I'm willing to take that bet. But also the other reason why you have to be cautious with this stock is that it has earnings in a week or 2. So normally around earnings, you don't want to be in a stock because you don't know what might happen. It could crash because some stocks do crash on earnings. I can show you like what happened to Palantir. Like on this earnings day here, the stock went down 15%. Sometimes, like here on good earnings, it went up 30%. So you don't know what really is going to happen. So for the CUK, if you decide to get into this stock, I would advise and say that, hey, when it's earnings day, make sure you have a cushion. If you have a 10% cushion in the stock, you can stay there. If you don't have a cushion, just take out a bit, half the position, leave the other half in there. And if it gaps up, put back the other half that you took out. Anyway, those are my 2 best stocks in this sector. There is this Norwegian Cruise Holding and CLH, a company that I used to like because it made me some money in the past. But currently, it has not been doing well. It's been gapping down so much. And honestly, this is not, when you see this in the stock market and the stock is correcting more than others in the same industry, that is not a good sign. It's better to be in the stronger stocks in the industry that people are not willing to sell. This thing, a lot of people are willing to sell it. But yeah, I hope this information is of value to you. If you like it, subscribe to the channel for more free educational content like this. Sign up for my newsletter that is going to be in the comments as well to see how you can always profit from such moves. Thank you, and may the markets be with you.